All right, welcome back to the FhatBear Pod. I'm your host, PB. This Thursday, we're diving into the latest drama fresh off Trump's so-called Liberation Day. First up, Bitcoin's back at 83K after what was supposed to be some grand Liberation Day fireworks from the dawn. The Orange Man's big day did what was supposed to do, causing markets to dump everywhere. We're talking a drop that shaved a couple percent off the total crypto market cap, landing us at a cool $2.67 trillion. 24-hour trading hit $123 billion, up a juicy 59% overnight. That's the sound of traders panic selling and running for the exits. Bitcoin dominance is flexing again to 61.9%. Meanwhile, the Fear and Greed Index took a nosedive from 29 to 24, going deeper into the fear zone. For the alt's performance, the top winners are EOS, Orca, Big Time, and Alchemist AI. The biggest losers are Act, Mass Network, Fartcoin, and Neo. Now let's talk about the big macro move of the day, Trump's tariffs. Trump strides into the White House Rose Garden, chart in hand like he's about to drop the hottest mixtape of 2025. The tape? A baseline 10% tariff on all imports. No exceptions unless you're in the USMCA club with Canada and Mexico, where non-compliant goods still get a 25% smack. Then, for about 60 countries he's dubbed the worst offenders, he's cranking it up, think 34% for China, on top of an existing 20%. 20% for the EU, Japan's at 24%, India's at 26%, South Korea's at 25%. You get the gist. The markets? They're having a full-on crypto crash flashback. Dow futures dropped 900 points after the announcement. S&P 500 futures tanked 3.38%, and Nasdaq futures took a 4.28% nosedive. Asia's not faring much better. Japan's Nikkei fell 4%. Australia's ASX 200 shed 2%. Gold spiking to new highs, because nothing says safe haven like a global trade war brewing. The U.S. imported about $3.1 trillion in goods last year, so a 10% tariff across the board could theoretically rake in $310 billion annually, assuming no one retaliates or shifts supply chains. But here's the rub. Economists are screaming from the rooftops that this isn't free money. The Tax Foundation says tariffs from Trump's first term already cost U.S. consumers $80 billion, and this new plan could dwarf that. Yale Budget Labs got a grim estimate. $2,700 to $3,400 extra per American household annually. The tariffs will take effect on April 9th, so we got about a week before then. Time to zoom into our crypto news. Fidelity Investments launched 3 shiny new retirement accounts. A traditional IRA with tax-deferred gains, a Roth IRA for tax-free withdrawals, and a rollover IRA for folks shuffling old 401k. That's right. The suits at Fidelity are tossing Bitcoin, Ether, and Litecoin into your grandma's IRA. No fees to open, no fees to maintain, just a sneaky 1% spread when you trade. It's like they're saying, hey, boomers, want some crypto with your Social Security? Come on in, the water's fine-ish. Fidelity Digital Assets, their crypto-savvy subsidiary, is handling the heavy lifting. They're keeping most of the coins in cold storage, offline wallets, so secure even North Korea couldn't crack them. This isn't their first rodeo. They've been custodying crypto for institutional bigwigs since 2018. But now, they're opening the gates to the retail crowd. Any U.S. adult over 18 in a supported state can jump in. You'll need a linked Fidelity brokerage IRA to fund it. And if you don't have one, they'll set it up faster than you can say to the moon. It's all part of their master plan to make crypto as mainstream as a 401k match. Coinlist, that San Francisco-based darling of early token sales, announced on April 2nd, 2025, that it's reopening its doors to U.S. accredited investors after a 5-year exile. Back in 2019, they packed up and left the states thanks to a regulatory climate under Biden that had crypto folks sweating like they just fat-fingered a $1 million trade. The SEC was swinging an enforcement hammer, and Coinlist decided it wasn't worth the headache. They've been chilling offshore ever since, launching hits like Solana, Near, Ondo, and Wallet Connect for everyone but Uncle Sam's investors. Their grand reentry comes with a token sale for 00 Foundation's 2Z token. Kicking off April 2nd, and running through April 22nd. It's exclusive to validators from Solana, Sway, Aptos, Avalanche, and Celestia, which is a quirky flex. No minimum or maximum buy-ins, allocation set by 00, and everyone gets the same price, revealed April 15th. It's Coinlist's first U.S.-eligible sale since Cadena in 2019, and they're promising more to come. The next wave of U.S. public token sales starts now, they crowed. Bold words. The Trainer Law Firm, a New York outfit with a nose for financial shenanigans, put out a call on April 2nd for victims of the Libra meme coin debacle. The Solana-based token, hyped up by none other than Argentina's President Javier Milei, launched back in February like a rocket, only to crash 97% in a single day, wiping out over $280 million across 75,000 wallets. Painful. Now, Trainer's digging into allegations of fraud, market manipulation, and racketeering like it's some Crypto Sopranos episode. Rewind to February 14th. Milei, the self-styled libertarian rock star, pumps Libra on X, calling it a private project to fund Argentine startups and small businesses. The Viva la Libertad project sounds noble, right? Hayden Davis, CEO of Kelsier Ventures and the guy who pitched it to Milei, swears it wasn't a rug pull, just a plan gone miserably wrong. However, Trainer's not buying it. Their managing principal, Tim Trainer, said they're zeroing on 3 juicy angles. The rosy promises that lured investors, the shady trading mechanics where coins sniped, and whether this was part of a broader racket. Racketeering's a big word. Think RICO, triple damages. They're not naming names yet, but the trail's hot, and Miley's endorsement is the match that lit it. Time to look at new developments from the DeFi space. Binance announced its second vote to list campaign, launched April 2nd, featuring a dozen projects vying for a spot on the big stage. Binance is playing democracy with this one. Users with a verified account and at least 0.01 BNB, about $6, can vote for up to 5 projects on Binance Square until April 9th. The lineup's a mixed bag of AI, gaming, DeFi, and RWA buzzwords. But don't get too excited. Binance still holds the final say, and they'll run their own checks. Think of it like a talent show where the audience cheers, but the judges can still send you packing. So what's the vibe? Binance is tossing these projects to the crowd like chum to sharks. But the market's not biting hard. Maybe it's too busy dodging Trump's tariffs. Posts on X say Binance Spark is fading, and I get it. Back in 2017, a listing meant 10x overnight. Now it's a shrug. The winners might get a liquidity boost, but don't expect miracles. Binance vetting could axe half this list anyway. My take? Ondo's got the best shot. It's got traction and a narrative. The rest? Toss-ups and see a maybe. Justin Sun, the Tron kingpin and master of chaos, alleging that First Digital USD and its parent, First Digital Trust, are insolvent. Sun tweeted that First Digital Trust is effectively insolvent and unable to fulfill client fund redemptions. He urged users to take immediate action to secure their assets. The guy's basically waving a red flag at a bull market, and the crowd on X loses it. Posts are flying, some screaming FUD, others yelling I told you so, while FDUSD, the stablecoin in question, takes a nosedive from its $1 peg, hitting as low as 87 cents on Binance before clawing back to 97 cents. What's the backstory? Buckle up because it's a mess. FDUSD, launched by Hong Kong-based First Digital in 2023, is a $2.5 billion stablecoin backed by U.S. Treasuries. Or so they claim. It's a Binance darling, holding 94% of its supply there after they ditched BUSD. But Sun's allegations tie this to a bigger shitshow involving TrueUSD, another stablecoin FD used to manage. Court filings from Tether, TUSD's issuer, say $456 million of their reserves got stuck in illiquid investments, like trade finance and some sketchy Dubai entity called Aria Commodities DMCC, thanks to FDT's mismanagement. Sun, who's tangled with TUSD as a market advisor and emergency lender, bailed him out with a loan when redemptions froze. Now he's pointing the finger at FDT, saying they're broke and dragging FDUSD down with them. Tether, the folks behind the $148 billion USDT behemoth, aren't just sitting on their hands counting fiat pennies. Back in May 2023, they dropped a bombshell. They'd start funneling up to 15% of their net operating profits into Bitcoin to diversify their reserves. Fast forward to April 2025, and they got over 100,000 BTC in their stash, worth about $8.4 billion at today's 83K price. That's not pocket change. That's a war chest, making them one of the top private holders globally, neck and neck with whales like Strategy. How'd they get here? It's all about the Benjamins, or rather, the billions in profits. Tether's a cash cow, raking in $13 billion in 2024 alone, thanks to their massive U.S. Treasury holdings, $97.6 billion worth, outpacing entire countries. On-chain data from Arkham Intelligence tracks it. Their walls ballooned from 33,900 BTC in September 2022 to 100,521 now. They're not day trading this stuff. It's a long-term hodl, locked in cold storage, signaling they're in for the haul. They also just bought 8,888 fresh Bitcoin in Q1 this year. For our airdrop today, let's go over OpenEden. Specifically, how to stack those sweet bills points by playing in their DeFi sandbox. First off, what's OpenEden? It's a platform launched in mid-2023 by some TradFi vets to bridge real-world assets with DeFi. Their big flex is tokenized U.S. treasuries like T-bill and USDO, offering yields backed by Uncle Sam's IOUs. Think of it as a stablecoin with a suit and tie, promising 5 to 6% APY from T-bills. Now, how do you farm this thing? You provide liquidity to their pools and stake it. The hot ticket right now is the CUSDO/USDC pool on Balancer V3, offering a 5x bills multiplier. That means for every dollar you lock in, you're racking up points 5 times faster than the base rate. Other pools, like USDO/USDC on Curve or Airdrop, give you 1x to 3x multipliers, depending on the setup. Holding your LP tokens earns you bills automatically, no lockup, so you can bail anytime. Want more? Lock T-bill token for up to 10x multipliers. 1 month gets you 2x. 12 months gets the full 10x. That's all for this Thursday. This is PB, signing off.